Testing 1, 2. Let's see. All right. Not yet. I just don't see where. Okay. So I want to share. How come I'm looking for that cursor thing here? See anything yet? No.
I haven't logged in into the room.
Oh yeah, log into the room.
It says wait for the host to start this webinar.
Okay, let's see. Can you see testing 1, 2?
You have to start it.
Oh, it should. How come it's not starting here?
I don't know. Let me leave this again.
All right, let me just. Huh.
Okay, so Jerry just sent a message that says he sees the screen.
Okay. Which screen do you see here? Let's see. Okay. Let's see. We're going to get started in a second. I want to make sure everybody can hear me. If you could type in the room and let me know. Okay, I see an okay. And you can see my, you should be able to see the screen with the charts on it. And, okay. All right. Okay. You see my screen with my funny mug? Okay. All right, good. All right. You guys let me know if you can't hear me, if I did, my screen's not showing because I'm having a couple little issues today, but I think we got it down. Hear me fine, I hope. So here's the deal today. We did the first one on Tuesday. It's still look at the markets, kind of size up how I look at the markets. Past action. Talk about some of the things I use. A couple tips and tricks, and see if we can get you some, on the right track, and at least looking at the market as far as making sure that you're trading within the trend and in the direction of the trend, right? All right, so this is for those who are new, who just came on. This is who I am. I'm going to do this quick. You could see my past history. I started in 1977, and it's been a long haul. I've done everything from executed for big institutional funds on the floor, like of the CME, like Tudor Jones, Louis Bacon, Toby Crable, Linda Rashke, who I married later on. She was my client in 1991. We ended up hooking up in 2008, and she was a client ever since. Meanwhile, I started my own company in 1995 called Future Path Trading, and then later on we decided to get into the software business when everything was going electronic, and we started Photon Trader in 2001, 2002. 2004, our company became an IIB so we could clear multiple relationships. And we rewrote Photon Trader, the trading software that you'll be seeing a little bit, 2008 from the bottom up. So it was a nice clean code written in .NET. With that being said, you're going to see some of this stuff. But this is more about just how to size up the market, how do you prepare for your day, and just looking at the market before it opens and after it opens. All right. This is my information too. Later on, I'll put it up. If you have any questions, you could contact me, call me, either way. Let's see here. I have to do one thing here. All right. I'm putting up a disclosure here. Everyone, if you've ever been to any webinar, probably you've seen these disclosures. It's just a regulatory thing that we should let you know that if you don't know already, futures can be a little bit risky because of the leverage. And anything that I'm showing here is just a matter of opinion. I certainly, it can't guarantee anything, or nobody can. And if they say they can, run for the hills. But this is, what I look at and some of my own past experiences of what I ended up liking to use for my own trading and looking at the markets. So, and this is where I spent 28 years on the floor, and then spent the rest of my time with the electronic markets, because the floor pretty much went away. I'm in there. So this is, I wanted to show you something before we get into anything today. This was yesterday. And this was actually pretty much towards the very end of the day. And you could see the market was in a bell curve, just a sideways bell curve, right? And when you see that, you can see like this bell curve pretty much means that the shorter term traders have control of the market. The market has already had a big rally. I think the big institutions are in, and buyers have kind of dried up at this point because the volume has been pretty quiet. But you could see in this picture here, this is a window trader profile. But you can, if you've never looked at a market profile before, you could still look at this over here. What this is these are 60-minute candles with 5-minute bars, profile bars inside. You can see the market was trading sideways, and all the way to the right, you can see the volume, this huge volume right in the middle of this particular chart. Well, that was last night before, or the day session before I went to bed. Just kind of interesting there. This, I marked up last night and before I went to bed. And so where you could see pretty much you have to consider volume as being the most important, as far as I'm concerned, indicator there is. Okay, volume is the only real-time indicator. And what I mean by that is every time a trade is made to the millisecond, it is displayed. Okay, and we're talking less than a tenth of a second. You're getting real-time updates on volume. And let me explain something about volume. In the past, when I was on the floor of the exchange, volume was not something that you can enjoy or see for yourself unless you were on the floor. You couldn't see real-time volume because there wasn't real-time reporting. And before the electronic markets, the reason why is that when a trade was made in the pit, call it a 5 lot, a 10 lot, a 100 lot, that trader, both traders that make the trade together, put their trades in the card. They put a bracket on there, a half-an-hour bracket, which later on will, show you a couple things. That's where market profile came from. And the volume that was on the boards was basically a 3-day average of the volume at that particular time. So it was worthless. It was not even worth looking at. When people said, well, the volume on the board, I'm like, don't look at that, because it's not being reported by the millisecond. Today, you get it by the millisecond. And most indicators, lag pretty far back. They're really lagging. And so you really don't get real-time indicators like any real-time indicators like volume. That's why it's so important. Volume confirms breakouts, support, through support or resistance. It can convert, it confirm a trend or confirm that the trend is not going to continue if there's no volume. Okay. All right. We're going to look at Photon with Window Trader, which, by the way, Window Trader today is ready to go. Next week, we're going to launch it with Photon. And the reason why we're doing that is I've been a market profile, if you want to call it, groupie, since the early 90s, because that was one way to show data distribution, which is similar to volume distribution. Later on, you could do it in volume distribution. So on the left side, that's what this is, the original. Remember I said A, B, C, D. Well, A, if you look here to the right, if you break it out into a 30-minute bar chart, A is every time a new price traded, you put an A there, and it builds this chart. And then it condensed into a profile on the left can tell you a lot about the market and levels. If you were to look at a regular bar chart, that's what this looks like. And then if you look all the way to the right, that's Photon, and I like using the volume candles, which this is a 30-minute, you can see the volume gets, as the volume comes in, the bars get wider, okay? And that is probably for me, one of the most visual ways of looking at volume. you can see right here on this particular rally, the market had no volume on this retest after this big bar, and what did it do? It started to reverse. To the right, you can see the high volume areas and the low volume areas on this volume profile really show you where the markets can be supported or will resist. High and low volume areas resist and deflect or attract price. And so that's, I wanted to show you that. And let me just see if I want to go further than this on the slide. Well, here's a volume candle. You can look at this particular volume candle, the photon volume candle. It's very evident when you see those wide candles, and you could see where the market slows down and it's quiet, and then it starts up again and confirms follow through to the next level. All right, let me see here. I'm going to do a new screen share here. Let's see if I can get this right. All right, can you see, you should be able to see a Photon Trader chart, right? And you see Photon Trader there. Just type in there if you see it. Give me a heads up. Okay, all right, good. So we're going to bring up a bunch of different charts. This is a 30-minute, and I just did a candle chart. What you see here is the 30 high moving average, the 30 low. I only look at those when the markets are trending. Otherwise, with moving averages, you can see in this area here that, you know, at the night session, nothing was going on until later on. So I don't look at the 30 high, 30 low as much as I do like on the day sessions, during the day session. But meanwhile, these little green dots, that's the PAV reversal. That's my last name, but I just call it that, make it easy. I programmed it into Photon, but I can show you later how. Everybody asks me, how do you figure it out? Because you could do that on your own software. No one's trying to push anything on you here, but it is nice for me. It tells me which way the market is going at the moment. Right now, we've got a little bit of a buy, but we're going to be careful because we're going to get into the day session, the dailies, and really to determine what the market's looking like, right? As far as for the moment and for the day. Down on the bottom, that's a 310 oscillator. That's Linda's 310 oscillator. You can also program that. It's an oscillator. Basically, it's the 10 minus the 3 moving average. That's the green. And then the other line is the 16 slow moving average. Okay. So on Photon here, one thing I do want to point out, because I've been asked this, they asked me to show a little bit about Photon, just so because I was doing some things on Tuesday, and I should have explained. There's on Photon Trader, we have multiple ways to put in orders. This is just a couple of ways. You're going to see I'm not going to do a full demonstration of it, but if I left click, there's the order, but you see it on the chart. You can also put it in on the chart. You can move it on the chart. Why is that important, and why we came up with that? I'm very much a technician. I like to see my orders not just by looking at the numbers, but see where they land on the charts. So, I might just move it a little bit once I see the order on the chart and say, okay, that's where we're, a better place, right? I will say this, there's a study on the human mind, and the human mind, the right brainers, which are visual, can react much quicker than somebody adding and subtracting on the left side. So numbers, looking at numbers, crunching numbers, remembering numbers, those things don't mean as much to me. I like to be a little bit more visual so that I can react to what I see. And then you trade what you see more than what you think, and you get confused if you're just trying to crunch numbers. So I'm not big on sitting there and pulling out a calculator or looking at the numbers here. I have an idea where they go in, right? But I might move it once it's in based on how the market looks, right? Okay, just cancel it. This short was up here, and that was from last night. And the reason why, we're going to look at the dailies. So on the dailies, I marked this up a little bit. The market is really about levels. That's probably the easiest way I can describe it. When we were trading in the pit, no one had charts, no one had electronic screens in front of them. It was a lot different. The basics, though, are the same. It's about price behavior. How does the market act when it gets to a certain price? You have to watch that, right? In the pit, okay, we're making a new high. Are buyers coming in and buying a new high, or is there no participation on a new high? Therefore, take this level here. You could see very little volume here. The market didn't stay up there, and then there was a reversal in the market. Here it tried to go a little bit higher. You got one little buy signal, failed, continued the down move. Very important to look at how the volume reacted on a new high. And on this bar here, we had a big volume bar. If we went above there with volume, we'd probably have continuation, but you could see there was nothing going on the next day, and then boom, right? So let's look at yesterday. Now, I prefer to keep things as simple as possible. And I will tell you a quick story. When I was executing for Paul Tudor Jones, he was this giant in 1986. I mean, everybody thought he was, amazing, which he was. I think he returned 190% for his clients, and he had 700 million on the books. Later on in the years, he had 14, 15 billion. He was pretty renowned. So when I was fortunate to execute for him, he would move the markets, absolutely. But I always wondered what he was looking at. Meanwhile, I had a charting service from 1979 all the way through there. And as I was executing and managing shares of American Express, at that point, I met him in person, and I was just curious to see what kind of charts he looked at. He wanted to see me and showed me his charts, and that's when he showed me the overlay of the crash of 1929 in the current market in December of 1986, and saying this is coming, which scared me because, of course, it did come in 87. He predicted it, and it was a big one. And he did amazing. But the point I'm trying to make is they were very simple charts. And here I had Gann fans on there, I had an Elliott wave. I did all these crazy things, regular technical analysis. And then there was no electronic really charts at that point. I was calculating moving averages with a calculator and plotting them. And I had a guy working for me just to do that all day. Well, that's when I decided to keep it a little bit more simple. And you always hear that. That term is overused, the KISS thing, keep it simple, stupid, or whatever. But, it's true. The more things that you look at, the more complicated it can get, and the more chance of making a mistake or not being clear of when to get in, when to get out. So I try to keep it a little bit simple. That's why I use I use this PAV reversal, which is my own reversal. But meanwhile, you could see we've been in a buy all the way up, but low volume, right? And these were previous highs and lows. And the center is more or less the point of control, the middle where the market would consolidate, come back to a little bit, and then when it finally would get above or below those levels, you get some kind of move. We had no volume the day before. This is like really amazing. As you know, the markets were very quiet, but we had our first sell signal on the dailies. At least this is my my reversal. So we got a little reversal. So my point here is that first determine using a daily chart, are we bullish or are we not? Are we not? Are we negative? Are we bearish? On the dailies. Then, look at a 30-minute. I look at a 30-minute and a 5-minute. 30-minute to confirm, in this case, this is a down move, to confirm the market's, a sell on the 30-minute, and then look for sell signals on the 5-minute. That's going to give you your biggest bang for your buck because you have everything pointing in the right direction. You don't want to swim upstream. You want to go with the flow. It's a lot easier to make money if you're shorting it in a down day, down trend. I have to tell you, too many traders try to get cute and they try to predict what the top will be without having any really, good reason for it. And they get run over and they get back sometimes weeks and months of, income that they made during that time. All right, so let's go to the 30-minute. Now, on the 30-minute, we do have a short-term buy. And the market did have a nice sell-off, okay? So I don't get cute and look to buy that because the market overall is in a sell. So the sell was yesterday, when we turned back down in this area here. And you can look on the dailies here is, when we broke this level up here. So I would be looking to sell rallies. So what do you do? The daily's in a sell, and we'll look for a 5 minutes. So let's just bring in a 5-minute chart here. Yeah. Being that I have 6 screens, but I can only show one at a time, I got to keep it contained to this particular one here. All right. So there's no doubt that using these webinar softwares, everything's a lot slower. It takes up a lot of CPU, so things are a little slower. So in this case, if you look at a 5-minute, you had a sell signal up here. So this would have been what to do. Now, do you put all your eggs in that basket? No. You could, if you're a 3-lot trader, maybe you do 1 or 2 because you did have a little bit of a buy on the 30-minute, but the dailies are in a sell. So I would rather short-term be looking for sell signals. Now, that's why going back to this, this might be deceiving, but don't forget, we're looking at opening pretty soon. So, and let's do this. I'm going to bring up candle volumes, and we're going to kind of watch the opening. Hopefully, I won't have any freeze-ups because of Zoom, the webinar software. And I will bring that up in a minute. So while I'm doing this, I'm hoping that you guys are, you can hear me good. I'll take questions later for sure. And I have some questions from the last webinar that I asked for questions that were sent to us and that I'm going to answer. One of them, by the way, was from a friend and trader that asked about, do I find any relevance in trading Nasdaq versus the ES? So I'm going to answer that while we're waiting for the opening. And the Nasdaq is a little bit of a different trade, but I do like it. The reason why I picked the ES is to focus on one market at the time, is that it's the most used market to trade in the indexes, or the most traded of all the traders that I've, and most of the traders that are that trade the indexes. So the Nasdaq has a lot more volatility, okay, which can be really good and fun. But you got to be a little bit quicker on the draw, and you have to think a little quicker because the market has these wild swings. And of course, we know that that's because Google and Amazon and Apple and all these big stocks really move the Nasdaq. They make up for most of the movement. So when those things are cranking, you do get some whip in it. Now, as far as he asked about the volume and liquidity. In all honesty, when people ask me that, I go, well, what do you trade? If you trade a 5 or a 10 lot, there's plenty of liquidity. Now, if I was trading and I was doing something for an institution where they told me, to buy 5 or 6, 700 at the market, I would be a little bit worried about that because often the size isn't bigger than 50 or 100 contracts at a shot, and the algorithms will come in and take them out, even though the volume's not there. But it's a lot harder to move 100 to 500 contracts. But 5 or 10, there's plenty of liquidity, and I do like the volatility in the Nasdaq. So those two are my favorite. I'm not big on the Dow. The Dow might be a little bit better if you're taking more of a stance on the market, but I'm not a big Dow fan, trading the Dow. Now the Russell is interesting, but the Russell definitely has a different character too. And there isn't that much volume in the Russell, but enough for, even if you're doing up to 20. So that's my 2 cents on those 4 indexes. So let's see, we're getting close there, 8:28. It's good. I see some questions that I'll be answering later. Okay. Okay. Well, maybe somebody missed this, but it says, which platform is this? This is Photon Trader. This is the platform I designed. I'm a partner in the company, actually, the majority owner. And we've had this since 2001, but we totally rewrote it in 2008. And we currently did a partnership with Window Trader, which you'll see some cool Window Trader charts as well. And that starts next week. So if anybody's interested, you can ask any of our, my guys, or even me, if you're interested in looking at it. So here we go. Now, hopefully, with all the volume, it's not going to get crazy. In this software, I have 4 or 5 charts. Won't freeze up because the amount of volume that comes in during the opening and close is crazy. You'll see this in a minute on the 5-minute chart. We're looking at a 5-minute candle chart. So the volume, as the market comes in, that 5-minute bar will widen as the volume comes in, so you'll be able to see it firsthand. And what you're looking at is a 30 moving average and high moving average, and a 30 low. So should be coming in any second. Here we go. You see the volume, the candle getting wider. Now the opening is really important. The opening range, the opening price, those 2 things are really important to pay attention through the course of the day. So once we have this 5-minute opening, that 5-minute bar is going to be very important, and the opening price will be very important. At least, in my opinion, it always has been, and it's something that you for sure need to to look at. And that means on the day session, this current opening here, because the cash is really the stock market. So the 8:30 opening. You can see the candle's getting wider. I wouldn't say this is a huge volume opening because sometimes those candles are double that size. But we are in a sell, and we were in a sell before that on the 5-minute. The daily had a sell. So that's really important. Those are the two things. If you're trading a 5-minute chart, trade the 5-minute signals. The 30-minute is just a bonus if you can have the daily, the 30-minute, and the 5-minute all going in the same direction. So the high-low bands, the 30 high band and the 30 low band, you can use different indicators, or different inputs. You can do a 25, a 20, and play with it. I've always found, I've been using the 30 high and 30 low since 1986. I did a bunch of testing when there was no computers out there to test these, so I had to painstakingly test it, and I just found it was the best. I'm not, I have no actual stats to show you. It's just you can try it for yourself and see if you like it. And the basic idea is if we're both below the 30 low, which we are, you would put your stop above the 30 high, which you can see the last two bars respected the 30 high moving average in the 5-minute. All right, moving along here. Yeah, somebody's just said, Christos, what are these two red lines? I'll just explain it real quick. It's the 30 high, 30 low, but what is that, right? Okay, if you were to take the last 30 highs here, you take all these 30 highs of these bars on the 5-minute, add them up, divide it by 30, you're going to get this line, right? That will be the 30 high moving average. They're never going to cross because that's on the highs. The 30 low is the same thing. If you take the last lows, including this one, all the way back, add it up, divide it by 30, you're going to get the 30 low. It's a good indicator. It's part of a buy and sell kind of system that you can use to help keep you in the right direction. So currently you would be short with a stop above here. And, now I want you to look at this low here. This low, let me just do this here. All right. Lows and highs of the night markets are real important to watch. Almost, pretty often. I don't have figures for you. More than often, I think you're going to test either the low of the night session or the high at some point. Now, if we get down there, we test it, you can see the volume is growing on the 5-minute bar. If we go down there, test it with this kind of volume, and it holds and it comes back up, there's probably a good chance that we will at least try to come back and fill in a little bit of the gap from the opening to yesterday's day close. Okay. And especially, this is a fairly decent sized gap. Gap meaning that, there was the market opened way below the previous day's low. So you can see we got another confirmation, another red dot showing that we're still down. There's no reason to buy it. Don't get cute because we could take out this low. Okay. And I'm going to show you some other charts that are interesting to look at. We're doing one chart at a time here, I'm spoon feeding it slowly. Here's the 30-minute, which the 30-minute is telling you to be a little cautious, but because you do have a buy on a 30-minute, it forced, got a couple guys in here, but overall the dailies are still bearish and the 5 minutes in a sell. So you're not going to be looking to buy it, especially with the dailies in a sell. Here's the daily. This is where we're at. So the bar is real thin because it's the beginning of the day, but maybe by the end of the day, we'll see if we have thick, a wide bar. I don't know how much volume we're going to get today. So I'm going back to the 5. Now you see what we just did. Big volume. We tested it. And the whole idea about the market is the market's looking to find fair value. I mean, basically, and that's where market profile comes in, a fair price to trade. We're always looking where buyers and sellers agree, right? Well, on the downside, the market is going to, test this bottom, and we'll know soon if that bottom is good. It will eventually, if it can't break it, then you get a short covering rally, and that's where profit taking comes in. Because at that point, that means that either sellers aren't, willing to sell more, and buyers are finding value down there. But it looks like we're going to test it. 2709 is pretty damn close, right? Let's see. While we're doing that, I'm going to just surf the questions here. Somebody says, is that a MACD chart below? Basically, it is. That's Linda's, indicator. That's Linda's indicator. I find it to be the best one. I'd rather use that than a regular MACD, but you can probably program it on a MACD. And again, that's this down here. We have that in Photon, but you can program it on your own. And Linda, I don't know if you know who Linda Raschke is, but she is my wife, but she's also renowned in the industry for those that don't know her. Back in 2008, she was trading a $120 million fund, and she made money during that whole crisis. She was up over 20%, I believe, with the fund. And same with 2009. She's been trading for 35 years, I think, since almost as long as I am, but she's younger. And we both came from same backgrounds. She traded in the pit early on, but then later on went to the screen. And she's a huge technician. It's kind of a wild relationship that you have your wife in the same industry. But we do also have our own ideas of how to trade the market, as well as we're unison on many others. Okay, so we're testing the market. This is the most interesting part. Let's see. We went down there, big volume. If we were to, have a reversal of the upside, chances are we're, going to go back and maybe try to fill the gap. So, at this point, for sure, if you were short, here's the test of the overnight market. I would be looking to cover. Okay, I just covered. I would be looking to cover that short, because most of the time there's a reason why this stopped in the night market. And you can also see good volume when we took out that low here. Let me add another line here, just kind of. So when we took out, this low here with volume, you can see the market tested and came back up. So there is good reason for that reversal. So why not take your profit? Now, it could keep going down, which it looks like it's trying to go down lower. But remember, it's an odds market. There's nothing wrong with taking a profit when you see a real good reason for that. And a real good reason is the night market stopped here. Big volume testing this market. It looked like it was trying to bounce. So you can take it. You can always reshort. You can always put on a trade again. But, we're talking about one big sell-off here, right? Let's just look at it this way here. You can see where the market sold off with big volume in the night market, and we had continuation. Now we had no green dots from here. You could see short, 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 all red. If you don't see a red or green dot, it's a rest period. Red, 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 red. And then finally here, the market was telling you we might have some sideways action or we might trend higher. But I wouldn't be a buyer. I would be covering shorts. Okay. So let's watch it a little bit farther. Meanwhile, I want to point out something. Okay, so we had a sell on the dailies. That was the sell for the ES. But it's interesting. We don't have a confirmation on the other markets necessarily. Well, take a look here at the Nasdaq. You know, the Nasdaq was actually stronger than the ES on this, pull back up. But don't forget, it sold off more as well. So you got to look at, the whole picture. Again, you can see the YM here, the Dow doesn't have a sell signal yet. So now, when you do see that, remember, it's a good thing to know, and because the market might have a rebound because there's not a confirmation on the ES. The other three haven't. They're going down, which is good, but you don't have an actual reversal sell yet. So, but you trade the market with the market signals that you have. So that's basically, let me explain that. So we're trading the ES. So this is what you would do in the ES. Now, it is good to have confirmations. Let me do this on all markets when you're trading. So you can see we have a sell signal on the ES, the Nasdaq, the YM, and the Russell. The Nasdaq did get a bigger sell-off than the ES, but they're all red reversals, all below the 30 high moving average, which is, also good, important for me. Momentum's below zero. So, the oscillator. So that's good. On all five of them, you have confirmation. All right, so let me see. Let me bring up other things to look at. I think I'm jamming a little bit too much in here, for these morning sessions, but this is all kind of new, trying to do. So let's take a look at this chart. This is interesting. This is yesterday. This is the night market, okay? These high volume areas and real low volume areas are very important. They attract and detract. So we're just basically looking at 2 days here. I'm looking at this night market, which is not 2 days, but two different profiles. If you look here, we traded sideways. So let me just do this. Just the market stayed within these parameters. And you can see when it trades sideways like that, I always like to look at that and try to determine who's got control of the market. While the short-term traders had control of the market, I think the larger players were already in way below and didn't feel like it was necessary to buy more up there and probably came in to cover. Because if you look at this formation, this is a double distribution. In the middle of the night, this is the point of control. But then when we broke that low, you can see how the market fell apart. And now we're redistributing below. And if you were to break these out into 5-minute bars, you could see here, actually 30-minute bars. No, these are 5-minute bars. Histograms of the market selling off. Once it got below here, you can see what happened here. There's a little tail or spike high, and then the volume here was on the lower part of this bar. And this is where we're at right now. Okay. And yeah, this is, 30-minute bars from opening of 5 o'clock to now. And then this is the new session. So these areas are really important. Low volume, like right in here. Higher volumes, you know, like this. And it's important to put these levels in before you start your day so that you're not chasing the market. I'm just putting them in front of you so that you can see what to look at. If you don't have that, it's okay. You can look at a volume candle chart. And if you have a traditional volume on the bottom, which doesn't excite me that much, but you could kind of make those markings that when there was a big down day and there was big volume, that those prices are important. It's kind of hard to tell on when the volume's in the bottom. That's why I like them on the side, or I like candle volumes. So let's go back to the daily. Somebody asks about the dots. How do you, it says, let's see. What are the red dots and what's the logic behind it? I'm going to show you that in a little bit. I did that on Tuesday, but these dots here is what one trader was asking me about. I'll explain that. So let's look at the 5-minute. We tested this low with volume, but it's not necessarily finished with testing it. Maybe it is, maybe it isn't, but you're still in a sell. But I'll have to say that this low right here would be the pivot. If this turns out to be a buy and we get a buy reversal, we get above here, then you could see the market retrace higher. So that's something later on you can look at. I don't know how much through the day we're gonna, how much we're gonna be able to show. Let me see if I got any other charts here to show you. Oh, here. Let's go back to this one here. This is the night session. This is the day session. Night session, day session. Okay. And I drew in these lines on high volume, low volume areas. You could see how important they are when you look at it this way. It's a little bit clearer on a market profile. You see the volume right here, pretty much right in the middle of this whole 2-day range. And then the night markets here are important because you can see the night market was the one that initiated breaking out of this high. And then the day market tested the night market in the middle there and pretty much redistributed the market a little bit higher, and the price traded up here for quite a while. Night market confirmed it. Next day we confirmed it. Last night we finally broke out of it. When we took out this low, that's where you could see this kind of very little traded between after breaking that out, probably because of the amount of selling that came into it. All right, I'm going to show, let me do this here. I have to do this. I'm going to add some questions, and let's see. Okay, I'm changing screens. All right. So these dots, I got to give you a little bit of an explanation how you figure out the reversals that I'm using. Let's see if I have it here. Let's see. Here we go. So these dots here, this 3-bar reversal. This happens to be, I always like showing this to give you an idea. We're looking at dailies. Very interesting because it's not as big of a run, but this was a whole month run. I believe it was like in way back in May. We had 23 up days or something like that in a row. And everybody kept saying, well, can't keep going higher, you know, looking to find places to sell. But this keeps you in the frame of mind and keeps you in the trend until it's time to actually get short or cover your long. So the red reversals or the green reversals means it's in an uptrend, red is in a down. This is how you would do it. You take this basic, start from here. And it's a 3-bar reversal. I call it a 3-bar. You can call it a 2-bar, whatever you want. But this bar here needs to be higher than the last 2 bars, the high, and the low has to be higher than the last 2, combination of the 2. So then you get a red dot. This one was, and then, so here's another red dot. This one here was still higher than this one, and the low was still higher than these 2 lows. It gets a green dot. Same here. But at this point, we weren't higher, but we weren't lower. And I don't do 1-bar reversals. Those 1-bar reversals can kill you, you know. Personally, that's my own opinion. So the rest period, the market does that. And that's where, you know, you don't have any more participation by, let's say, the institutions. It's just short-term traders trading. We get a rest. And then all of a sudden, new interest in buying, and there you go. We start out again. Took out these 2 highs. We're higher than these 2 lows, so on and so forth. In Photon, you can just, it's, you know, I have that programmed in there, but for those who are coders and you're on some other program, we offer 20 different softwares. So I'm not trying to push Photon. We're a brokerage firm, but you could program them on most of them, I think. But this is something that I designed for myself. Does that answer your question? I hope it does. Okay. What time is the profile on the right? So the profile that we had, how many days? That last profile that I just showed was, I was only showing, let's see, 1, 2, 3, 4 days. But it actually, if I zoom out, I have the whole month of, you know, I'll go back to that for a second. And before I go on, did I answer your questions on the reversals? I sure hope so. If not, any questions that I didn't answer or I didn't explain, please contact me and I'll be more than happy to go over it with you. Okay. So there was a question, some questions from last week, Tuesday, that I'm going to cover real quick. And let me do this here. Okay, I'm going to go to new share, go back to this. So this particular chart that we were looking at before now, all I did was I blew it up. Before I had it blown up, and somebody asked how many, you know, days were that we were looking at. I was just looking at 4 days just so that we can zoom in. But if I go farther back, you can see the consolidation on these 3 days and then when we came out of it. Usually when you come out, this is called double distribution, where the market comes from here and then rebalances higher and can continue a trend. So when you have consolidation and you come out of consolidation, you know, if there's good volume at that moment when you come out of consolidation, then you should get confirmation of follow through. Okay, so I'm gonna see, there's some questions here. I'll find those here for a minute. I do know I have it. So this is good. How do you know it's a range bound day from an opening period? Well, that's watching price behavior can help you. That was a question from last week. In this case here, well, actually, there's a good chance this won't be a range bound day, because when you see double distribution like this, the next day, you know, you're going to go back and test that this is a pretty big range. You could have a basic, a nice pullback in a fairly good sized range. On a day like this area here is where, I mean, I'm talking about this last 2 days. You could see that based on how the distribution was, it was trading sideways. You can start to tell, and the volume is very low, that it could be a range bound day. Now, but for sure on the opening, you need to look at the opening. So we tested this low, and I think I was trying to explain to you that this is the 5-minute. Until I get a buy here, I probably would be short and selling rallies, but I'm not going to, I don't like really to buy the market when the dailies are in a sell. Now, there is the question that, do you ever go the other way? Do you ever scalp the other way? The only time if somebody's going to get long this market, a couple of things to keep in mind. You want to make sure that all 4 indexes have a buy on a 5-minute, and you do want to have a buy on a 30-minute. So if the day's in this, let's say the day today is a sell day, the only time I might buy, and it would be a smaller amount of contracts, and it would be only, with a tight stop, is when you have a big gap down like this. The other markets aren't confirming on the dailies like this, but we're confirmed to sell there, and then look at all the bars, all the other markets here. We got to buy on the Dow. We got to buy on the Russell, which they are on buys on the daily, and we might get a buy here. So the ES is lagging based on these 4 charts today. I hope I'm making sense. Okay, so let's go back to the 30-minute. Now remember, we did have a buy on the 30-minute. It was just a little bit, so you got to be careful when you test a previous day low. When the 30-minute tried to pull up, I would suspect, when you come out of this kind of break here, let me show you this. When we broke those lows finally, with some volume, and I'm imagining there's some volume there. Let me do this. You can see that, we might get a pullback to this area, and that's all I would be playing for if you were just gonna, go with a 5-minute buy. But you got to wait for a 5-minute buy. You have a 30-minute buy on the 30 minutes. You got a 30-minute buy on the reversals. So you get a buy here, then maybe you can go for a scalp. But I generally would rather play fewer trades and put my eggs behind, or my money on the more solid trades that have all the stars lining up in the right direction. Okay. All right, let's see. Okay, I see some great customers of mine in here and new people. So somebody was asking, what the ES is. It's the S&P 500, but the E-mini contract. That's the symbol for the exchange. So you understand that 30 high, moving average, 30 low, it looks like. Okay, and I'm looking at, see if there's any. I answered a few of them. Somebody said, do you use parabolics, Fibonacci's? I do once in a while. I will tell you that Fibonacci's I only use on dailies and extreme highs and lows, but I don't really put too much behind them. I don't believe they give you buy and sell signals. They might help you with some levels. Parabolics are okay, but parabolics, I would rather use the PAV reversal bar, the dots that you see, rather than a parabolic, because it's, you know, there's just too much more lag, and there's more risk when you're playing a parabolic. These give you a lower risk for me. All right. Okay. Well, there's a bunch of other questions, but I think we are well past the time that we were allowed to do, or that I said I was going to do this. And we are going to do one on Tuesday morning, I believe. We're taking this, uh, one day at a time. I think, we'll shoot you an email with a link on Tuesday of next week. And also, you might get a link for Tuesday. I'm doing a webinar to introduce the new software, and we're going to have Terry Lieberman come on, which will explain a little bit about market profile, what they have, do a demonstration if you're interested in seeing it. If you're not, I'll be doing the Tuesday morning and the Thursday morning again. I believe they'll both be in the morning, and we'll go from there. Um, let me do, let's see here. I'm going to go back to second one. So this is the current situation we're in. We're retesting the lows, and you can see right here. This will be a real big level down here. The 2703 to 27 area. Probably good support looking at this last low. Okay. Meanwhile, let's see. For those who are interested in my wife's book, it just came out. You can go to Trading Sardines, Google that, or lindarashke.net/products/TS. And I got to tell you, she's the real deal. I mean, a lot of good stories, some lessons learned that you can learn, um, good and bad, things you can learn from, and a couple tips and tricks. So it's a great book. Just came out, and we're getting some traction on it, but we don't make a lot of books. She just wanted to share a little bit of her past. She definitely has some good history. Okay. Let me go back to this page here. You can see if you have any interest in any of the products, you can contact me, and I'll put you with somebody that can give you a demo or get a simulator. If you're interested in Future Path, we have great rates, and we have a great service, customer service, good people. We've been around. I've been around for 41 years. The company's been around for over 20. And if you have any questions on this webinar, please feel free to call me or contact me. It means a lot to me that you get something out of these. Otherwise I don't really want to do these if you're not learning something. And give me some feedback, what you'd like to see. Maybe we'll do some different markets next week. I'm going to take this one day at a time, and it's going to be through February. Okay, well, we'll talk to you soon. Have a good trading day. Keep an eye on the previous lows there. That will be pivotal, and we'll go from there. Good luck.